We need to extricate ourselves from 2019, and the way you do that is to speak to people of their annual forward view. Kit Juckes, of course, at SocGen, writes a definitive 2020 view on foreign exchange and does it with a prism of short, sharp sentences. I love what you do. It's boom, 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 boom. What's the thing that matters within the 10, 20 pages you have? What's a single distinction right now?
The single distinction is that it's all about growth, fundamentally. So the question for next year is how much will the U.S. economy slow? I was in the States recently. There's a lot of optimism. I think that optimism is way too optimistic in terms of the dangers facing the U.S. economy. If the U.S. economy slows, President Trump wins, the dollar falls.
Yeah, I look at the 2020. We want to cover that more in the hour ahead. But really, right now, it's about the entire news flow of data, and particularly on trade. I mean, it's extraordinary to get to December 15th with a few distractions we have along the way.
And you know, my working career has been made up of 90 to 95% growing, sometimes rapidly growing world trade. We learned in school that it was a good thing. This is brand new, this shrinking world trade. I'll put a book on everybody's Christmas list, but The Economic Consequences of the Peace by John Maynard Keynes is the short book to read this Christmas that's relevant about this now. And yes, if we get world trade weaker, we will not get respite for emerging markets. We will not get respite for the Chinese economy. And a weaker Chinese yuan will be one of the big themes for next year.
What would Keynes say about the U.S. tariffs December 15th?
He would say we need to rethink all of this and not go down this path.
Okay, many people say that, but who is rethinking this?
Nobody's rethinking this. No, I think that December the 15th is that the chances of postponement are reasonably good. And I know nothing in terms of the politics of this, but that letting those tariffs increase in terms of the pressure it puts on the Chinese economy, on the Chinese yuan, and on U.S. consumers, given where these tariffs hit 2 weeks before Christmas, surely this gets postponed. But, you know, I mean, surely we've been surprised a multitude of times. But I think the market expects them to be postponed and is just nervous they might not be.
Okay, but I just don't understand with the you know, when bonds and equities go back to tracking each other, or what needs to happen for the markets to just become a little bit more normal, or a little bit more what we were used to.
Then we need to go back to focusing on what the Fed does, what inflation does, what growth does. We need to not have days like Friday when we get an on-farm payroll result that's a big, big, big surprise, and by Monday morning we've got yields exactly back where they were when we started, give or take. You know, that's what we need to get back to, that focus. We're not being allowed to do that.
It's one thing to forecast the thing that's going to happen. It's another thing to get the timing right. This year, so many people got weaker dollar wrong. I mean, it was really quite resilient. What will be the catalyst to get to weaker dollar?
The downside surprise, when the U.S. growth consensus starts falling as fast as other people's growth consensus. And we could go back all the way back to you know, in terms of interest rate differentials, growth differentials, this is so like the early 1980s. So the period of Volcker and Reagan, the period of dollar mark going to 345 in February 1985. Yeah, but
the deltas then were huge in the early 80s compared to now.
But if you looked at the yield differential between 10-year notes and 10-year bunds, this is the time when they're most like that. They haven't been as wide as this since then. You've got to remember, the Fed had cut rates 3 times before the dollar peaked.
Right.
And the yield differential had been crushed before the dollar peaked in February 1985, because we had so much momentum built into that trade. And then we got it to turn around. I think the timing's incredibly hard to get right, but I think it needs to be. I think we need to see the whites of the eyes of a U.S. slowdown.